This is the FCTO Daily Forex News Report for the 1st of August 2013. The US dollar pared some of yesterday's gain in the Asian session today, but remained generally firm. Yesterday's Federal Open Market Committee meeting turned out to be more dovish than expected, with policymakers warning that modest growth, rising mortgage rates and persistently low inflation might affect recovery. Concerning quantitative easing tapering, the Fed intentionally separated the decision to taper from tightening and reiterated that the schedule of tapering would be dependent on upcoming economic data. The statement does not alter market expectations that the tapering will begin in September. The Dow edged higher to a new record high of 15,634.42 before closing 21 points down at 15,499.54. 10-year yield jumped to as high as 2.702% but closed lower at 2.59%. Gold continued to stay in a tight range above the 1300 level. The dollar index has a wide range yesterday, but closed nearly unchanged and is trading slightly below the 82 level for the moment. There were three key points noted in the statement. First, the rise in mortgage rates might pressure the housing market. This would eventually reflect in the bigger picture of an economic recovery. Second, policymakers remained concerned that inflation rates had changed below the target of 2%. As mentioned in the statement, inflation persistently below its 2% objective would pose risks to economic performance. It's added that policymakers expect inflation will move back towards its objective over the medium term. Third, only Kansas City Fed President Esther George dissented the decision to maintain the asset purchase program at $85 billion per month. She was concerned that the continued high level of monetary accommodation increased the risks of future economic and financial imbalances and over time could cause an increase in long-term inflation expectations. In short, George preferred to see the Fed start tapering the accommodative measures. In June, she and St. Louis Fed President James Bullard voted against the decision, but for different reasons. Instead of urging for tapering, Bullard said last month that the Fed should signal more strongly its willingness to defend its inflation goal in light of recent low inflation readings. The strong wordings in the statement about concerns over low inflation probably changed Bullard's voting decision in July. The European Central Bank and Bank of England meetings will be the major focus today. The Bank of England is expected to hold rates unchanged at 0.5% and maintain the asset purchase target at £375 billion. Minutes of the July meeting revealed that no more policymakers pushed for expansion of the quantitative easing program, and thus a change in policy is basically ruled out for this meeting. The main focus is whether the central bank will continue to improve communications with forward guidance of the monetary policy. For example, the bank might start to be more explicit on how long would it expect to hold rates unchanged at the current level. The European Central Bank is also widely expected to keep rates unchanged at 0.5%. Draghi might sound a little bit more upbeat on the economy as recent economic data showed improvements in the outlook. Meanwhile, the ECB's forward guidance last month caused a bit of confusion in the markets, and Draghi might make use of the press conference to clarify the ECB stance further. On the data front, official Chinese PMI manufacturing unexpectedly rose back to 50.3 in July, giving some support to Asian markets, but the HSBC PMI manufacturing was finalised at 47.7. Australian import price index dropped 0.3% quarter-on-quarter in Q2 versus expectation of a 2% rise. Eurozone PMI manufacturing final and UK PMI manufacturing will be featured in the European session, whilst the US will release challenger job cuts, jobless claims and ISM manufacturing. For all the news affecting the Forex market throughout the day, join us at forexcurrencytradingonline.co.uk. That's forexcurrencytradingonline.co.uk.